Okay, introduction. Financial statements should be completed as soon as possible in order to be useful. One way to speed the preparation of financial statements is to use the worksheet. And this is blue, so you should highlight it. A worksheet is a form used to gather all data needed at the end of the accounting period to prepare financial statements. So the worksheet is not a final document. It's a sheet that we're going to use to prepare all the information we need so that we can create our financial statements. Okay? All right, again, I want to remind you where we are on the accounting cycle. So we did the step 1, the analyze transactions. Step 2, we journalized the data about the transactions. We put that in the journal. Step 3, we posted data about the transactions. That's where we posted to the ledger. And then now we are on step 4. Highlight step 4. That's where we're at. Step 4. You go ahead and highlight that. It's not going to come up too well in blue. See, yeah, well, it comes out like that. So highlight step 4 so that you know that that's where we're at this point. Okay, the worksheet. The worksheet has many different columns. It has one column here for the account name. This is where we would put the account names such as cash, accounts receivable, accounts payable, equipment, so on and so forth. The account name. And then we have the trial balance. This is where we would put the balance of that particular account, what was left on the ledger, the balance there. And then we have adjustments. This is what we're going to talk about today, adjustments. So this is where we would put the adjustments that we're going to deal with. And then once we do the adjustments, then we're going to have a new trial balance. So whatever adjustments we make, we're going to reflect that in the new balance. And then the income statement and balance sheet we're going to do with these later. Right now we're going to focus on these. I don't want to put too much at you at one time. Okay? So the worksheet has an account name column. The worksheet also has 5 sections, and each section has 2 columns. If you notice, each section has 2 columns. One for what? Debit, and one for credit. Debit, credit, debit, credit. All right, headings of the worksheet. The worksheet has 3 parts to the heading. Just like a financial statement, the heading answers who, what, and when. Who, in this case, is going to be Eli's consulting service. What, and that's worksheet. It's a worksheet, so Eli's consulting service, and then worksheet, and then when, month ended December 31st, 2019. And I'll show you an example of that. Go back to this. This is the heading right here. Eli's consulting service. Let me highlight it so you can see it. Eli's consulting service. Who, what, worksheet, when, month ended December 31st, 2019. Okay, you see that? All right. So that's the heading. So I'm going to go back to this slide right there. Okay, first step. The first step is to enter the general ledger account names. So after we do the heading, we're going to enter the account name. So we will need to add 4 new accounts at this time so that we can make adjustments at the end of the month. If you are not sure whether you need any additional accounts or what those account names will be, remember, you can always add them at the bottom of the existing list of accounts. So let's say, for instance, you're add it at the bottom, so it's okay. So we're going to look at here. Step 1, into the general ledger account name. So notice here, first one, cash. And we're going to list these as we list them on the ledger, right? The very first one is the assets, the cash, the accounts receivable, supplies, prepaid rent, equipment, accumulated depreciation equipment. That's one that's new. Accounts payable. Then we have Trayton Eli Capital, Trayton Eli Drawing, fees income, salaries expense, utilities expense. Now, these are adjustments, new expense accounts, because these are going to be the ones that we're using. For instance, during the month, you bought supplies at the beginning of the month. Let's say you bought $100 worth of supplies, but in that month you used $50 worth of those supplies. We would make an adjustment here under supplies expense. And that's what we're going to talk about that. So these are new here. Supplies expense, rent expense, and this is depreciation expense of the equipment. And then the totals. So those are new accounts that were not on the journal. So we're going to add them to the worksheet. All right, step 2 is you're going to transfer the general ledger account balances to the debit and credit columns of the trial balance section. So, for instance, you're going to look at your ledger now, and you're going to look at your cash. What was the balance that you ended with under cash? And then you would put it under whether that is a debit balance or a credit balance. And remember, the reason why we put it under debit or credit is we always put the balance under the what? The side of the account that's always increased. That's called the normal balance. So in this case, cash is increased on the debit side, so we put the balance on debit. Okay? So we transfer your balances over from your ledger. So what you can do to practice is you can take the worksheet that I sent you, take your ledger that you left off on the last exercises that we did, and write your account names and then write the balances. You could do that. Step 3, you want to total the debit and credit columns to prove that the trial balance is in balance. So here, again, these need to balance. If they don't, something's wrong. Either you entered a number wrong, you're missing a number, or something's wrong with your addition. So make sure that those two balance. Then you want to place a double line. This is blue, by the way, because I want you to highlight it. Right here, step 4. Place a double rule line under each trial balance column to show that the work in that column is complete. So there's a double line. Okay? All right, step 4. Now it's time to move to the next step of columns. We need to prepare adjustments for unrecorded business transactions. So let's make some adjustments. The process of updating accounts at the end of an accounting period for an unrecorded item that belongs to the period is referred to as making adjustments or adjusting entries. The adjustments are made in the adjustments column. All right, so right next to the trial balance, you're going to notice there is a column for adjustments. And again, there's a debit side and then there's a credit side. So we need to remember, how is an account decreased? If we're decreasing an adjustment or increasing adjustment, how is it increased or decreased? So if we're increasing adjustment, we would write it on the correct side where we increase an adjustment. And how do you increase how do you increase an adjustment? An expense, remember expenses? We would debit it. Debit an expense to increase it. Adjusting the entries are first entered in the adjustment section of the worksheet. Okay, so here's an example. Supplies adjustment. Eli's consulting service began the month with $1,500 in supplies, and at the end of the month, $1,000 in supplies remained. So that means they used how much? $500. So $1,000 remained. So you subtract that $1,000 from the $1,500, and you got $500. So you have $500 remaining. You have $1,000 remaining. You used $500 worth. So what do? We need to take the supplies. Remember, always 2 entries for every transaction. So what we're going to do is we're going to reduce the supplies by crediting it. And then we're going to increase our supplies expense by debiting it. So you see how we did that? Under adjustments here, we credited the supplies. And then we debited the expenses, supply expenses. So that indicates that we used $500 worth of supplies. We're reducing our assets. Again, reducing our assets, which is supplies, by crediting it, and increasing our expenses by debiting it. All right, so let's look at another one. A prepaid adjustment. On November 20th, 2019, Eli's consulting service paid $8,000 for December and January's rent. As of December 31st, 2019, 1 month's rent had already been used up. So that prepaid rent is no longer the same value because one of those months has been used up. So let's look at here. They had $8,000 for a prepaid rent. That was for the month of December and January. So they used one of those months worth of prepaid rent. So what was the dollar rent was used during the month was $4,000 of that was used up. So the answer is $4,000. So $4,000 is left, and then $4,000 is what the balance is because we used up half of it. So it should look like this. Under prepaid rent, again, that's an asset. We're decreasing that prepaid rent by $4,000. And then here, under expense, rent expense, we're debiting $4,000. So again, we're decreasing the value by $4,000 by crediting it. And then over here, we're increasing our expense by debiting it. All right? All right. Okay, so what I'm going to do is I'm going to stop right there because I want to do the depreciation next lecture because I want to spend more time on it. But I want you to go back, watch this video, and practice doing these adjustments, what we just did. Create your workbook. Put the accounts here from your ledger accounts that we created last time we did this exercise together. Okay? Put your balances and then make those adjustments that were done today. Okay? So I'll see you next time. And I'll probably put out a lecture tomorrow. So, see you guys.